Let's talk about the IIFL group now. I mean, the group has done pretty well in terms of earnings and stocks have performed very well as well. I mean, you look at IIFL Finance, you look at IIFL Securities, or you look at the wealth management business. Now, the group is IIFL Finance is laid out as a 525 guidance, which is a loan growth of 25%. There is so much to talk about as far as the group is concerned. Nirmal Jain is founder and chairman of the IIFL Group. Mr. Venkatraman is co-promoter of the IIFL Group. Mr. Venkatraman, of course, looks at the IIFL Securities business pretty closely as well. He's the chairman there. Gentlemen, great to have both of you here. Thank you very much for your time and congratulations on what has been essentially a remarkable journey. We speak with, one of you, but I think we have both of you for the first time. At least we've not had both of you together in a while, so it's great to see both of you. Thanks very much. Prashant, this side. Mr. Jain, if I can start by asking you with something very current and newsy. The RBI increase in risk weights, Mr. Jain. What's the impact at the NBFC, both from a sort of bank borrowing level and, of course, on the unsecured portfolio when you lend?
Okay. Thanks, Prashant. So RBI's increase in risk weightage, I think, is really proactive and I would say a very timely decision because there has been very aggressive lending in the personal loan space, unsecured personal loans, and particularly by new age fintechs and new NBFCs. And many times they are funded by private equity and they try to change the volume target. And sometimes that can get into some, obviously, credit selection gets compromised. So as far as we are concerned, our personal loan book is about 4% of our total loan book. And our personal loan strategy primarily is co-lend, is cross-selling. So what we do is that our customers for home loan and gold loan, who have had a good track record, we give them kind of a top-up loan, which is in the form of personal loan. But even that has slowed down now and is a very insignificant part of our business. Also, what RBI has done is that lending to NBFC, they increase the risk weightage, but there are exceptions. And housing finance, microfinance, and priority sector, I mean, this bulk of our business, almost entire incremental business is not impacted by this. So, the impact of RBI guideline will be minimal. There'll be some risk weightage increase on a personal loan portfolio, which I said is not very significant, but still it will have a very little impact on our capital adequacy.
How much, Mr. Jain? I mean, would you, very minimal as you said, but
there's a few basis points, I would say maybe around 10 basis points or so on the capital adequacy, which is, as I said, is insignificant.
We just had the management of Chola Finance with us 15-20 minutes back, and they actually said something similar to what you were saying. They had 10 partners in the new business. They said, we've dropped 2 partners, and they said, I asked them, who are these 2 partners? They said, well, they're startups, fintechs. And they got a little too adventurous. Something similar to what you were saying, Mr. Jain.
I would equal similar sentiment. Yeah. That some of the new fintechs were getting too adventurous, and that is where RBI has been very proactive in just making sure that this doesn't, grow to a bigger problem.
Is this an entity problem, or do you think this is the size of the, very small, under 50,000 rupee loans where the problem is?
Yeah, 50,000 rupees, even smaller, I would say 5,000, 10,000 rupees loans, sometimes in the nature of buy now, pay later. And then that, once with a very, short-term track record, they offer personal loan and, many times what happens, supposing a customer has a credit eligibility of, say, 50,000 rupees. And suddenly he gets 50,000 rupees offered from 4 players, and he might end up borrowing 2 lakh rupees. And I think, so that is one scenario. The other scenario is that the new models which, try to offer credit to new-to-credit customers, they are relying on certain parameters which are not time-tested.
Hi, good morning.
This impact will be, I think, much lesser on the established NBFCs who have been traditionally in the business of lending for many years, but it will impact more the new-age NBFCs or new-age fintechs, that have just started in the last few years.
Okay, all right. Good morning, Mr. Jain and Mr. Venkatraman. So we get that clarification, Mr. Jain, that the impact of RBI's recent, changes or announcements will be minimal in your business. But you have a bigger goal, right? You want to look at taking your AUM to around 1 lakh crore rupees with profitability spiking up as well. Tell us, how do you see growth pan out from here on? And what would the contribution be As of now, I think home loan, gold, LAP, they constitute nearly 50-60% of the book. So how do you see that changing going ahead? What should the mix be?
So Prashant, I'll just tell you a little bit about how our business model is and how we are going to achieve this. So what we are, our business primarily focuses on customers and geographies that are not catered to by bank in a meaningful manner. Either banks find it difficult or unviable to reach out to small customers. So when we are talking about loans or say 50-60,000 rupees of gold loan or 2 lakh, 3 lakh rupees of the unsecured business lending, and also in geographies and areas which are remote and states which are not really well covered by the banks. So that is the segment that we target. That is the target customer that we have. And as the economy is doing well, the credit penetration still is poor. The demand for working capital loan by small businesses is increasing. Many of them borrow against gold, and many of them, who are not able to get the unsecured lending. Similarly, if you look at the affordable home loan space, also these are our ticket size around 15 to 16 lakh rupees. So what we are talking about is the value of the apartment or home will be around 20 lakh rupees. So you can imagine that they'll be in the far suburbs of cities or in smaller towns. Again, the reach of traditional banks and larger HFCs is very limited there. Microfinance also is growing very well. I mean, is a business which is very closely linked to the economic activity. And whenever economy does well, you'll see that the microfinance volume growth as well as the credit quality and collection efficiency improve. So as of now, all our businesses are bet on the faster economic growth, and credit penetration in India is still much lower than what it ought to be. Just to give you some data point,
Sure.
Say in case of MSME unsecured business lending, the market will be about 90 lakh crores. We are hardly not even 0.1% of the same. If you talk about gold loan, then the stock of gold in India is around 28,000 tons. And incrementally, we get about 800 tons of gold import, primarily which gets converted to ornaments and jewelries. If you look at the gold in our vault, is around 60 tons. So I think the opportunity to grow is significant. What we have done in the last 2-3 years is that expanded our branch network, because all our
Sure, Mr.
small
Jain,
ticket
I'm
retail
just-
business is distribution led. We set up almost about 1,000 branches, more than 1,000 branches in the last 2 years. And
Sure,
now,
Mr. Jain, due to paucity
this is
of
the network
time,
that
I'm
we have
just going
leverage,
to... Sure.
Sorry?
Mr. Jain, I'm just going to interrupt you due to paucity of time. We just had a quick question for Mr. Venkatraman. It's been a very strong year for the capital markets business, IIFL Securities, iBanking, and, you've led a lot of the IPOs. Going into next year, what is the outlook? Do you expect a little bit of this euphoria to probably scale back a little bit? And also on your private wealth business, we have big players coming in. We have, Reliance, which has thrown its hat in the ring, HSBC, which is restarting. In that context, give us an outlook on what the next fiscal looks like.
Thank you. And what we want, we are very bullish on the India story, and we are very bullish on the India macroeconomic. So long-term perspective, the entire sector related to capital markets looks very sanguine. And so basically, we are very well positioned to capitalize on the India story, because we have invested a lot in talent. Our management bandwidth is very strong. We also have invested in technology. We also have capital. We have built a brand. And most importantly, we also have a distribution reach across the country. So I think even if there is some cyclical variation, maybe 1 quarter or 2 for a correction, simply because the markets are run up very sharply and the returns are front-ended, on a long-term perspective, the long-term prospects of this segments are very good. Coming more specifically to investment banking and institutional equities, I think the institutional interest in Indian stock markets are very high. We are seeing a revival in private capex, so more and more companies will tap capital markets to fund growth. And in that segment, given the fact that we have a very strong research franchise, we have a very strong relationship with all the long-only institutional investors, and most importantly, we are one of the few bankers on street who have the capability to fill all the 3 buckets of the IPO construct, the ECM construct on our own, be it institutional, be it retail, be it HNI. We are very optimistic about the prospects. And one last point I want to just add is that in India, competition is always given. It's a matter of time. So I don't think in any business, we have seen a kind of lack of entry of competition. So, and we have been in this business for the last 28 years, and we have seen cycles. And so it is up to us to build a moat, and it's up to us to build a talent and make sure that customer requirements are taken care of, and we will surely forge ahead.
The securities business, Mr. Venkatraman, what kind of growth should we expect? What should be the growth rate? What will be the growth rate?
No, it's very difficult to give a number on the growth rates because, as you know, growth is a function of capital markets. And in the last 2 quarters, we have seen a huge tailwind to the industry, be it in terms of trading volumes, or be in terms of deal acceleration, or be in terms of IPO. So in my guess is that, and also most importantly, business is not built on a quarter-on-quarter basis, but on a long-term perspective. So on a long-term perspective, I think we are confident of growing at high teens.
High teens, okay. When you said it depends on capital markets, I thought that was a settled issue. That capital markets are going to be good for a while. That's the view. That's the consensus view.
In spite of the cyclical blips in the capital markets, if you look at our business construct, we have a retail business, we have an institutional business, we have institutional equities, we also have financial products.
No, absolutely.
Lending. So, given that we have 5 engines of growth, I'm sure one of the other will make sure that
Absolutely. Mr. Jain, just a last question. The wealth management business is also getting a lot of interest, seeing a lot of interest. Just, right, I mean, and you've done well there. The stock's done very well in the recent past. What's the vision there? What's the market share currently? What are the plans there? Briefly, sir.
So, I think our market share in HNI, ultra HNI segment is around 4 to 5%. No official data on this, but I think we try to make the best estimate of it. India is probably the country where wealth is growing at the fastest pace, and we are amongst maybe the leading player in the space. So there's a tremendous trajectory for growth, and we have a 3-pronged strategy there. One is that we use digital technology and offer the similar products and services to mass affluent segment. And 2, will geographically expand. So we have about 20 centers now. Our footprint will expand to 50 cities in the next 2 to 3 years within India. And globally, I think there's an NRI concentration in Dubai, Singapore, and London. So we'll expand our operations there and tap that market opportunity as well.
Okay. All right, Mr. Jain, Mr. Venkatraman, it's a pleasure. Thank you very much for joining in and talking to us and giving us a perspective on all of the IIFL Group companies this morning. Thanks very much for joining in, and wish you a great festive season as well.